What's up, everyone? So it is the 13th of April, and today I want to go over some trades I took this past week. Some were news trades, some trades played out in my favor very, very well. So pretty happy with that. So one by one, let's go over from the most recent till we got CPI. We had CPI, then we had NFP before that, and then there was another. So I think it's going to be the week that passed and the week before. So let's take a look at the first one over here. This was the most recent one, $32 loss, like almost like a 21 pip loss. Let's take a look at this. Let's scroll down. All right, so this was CPI. This was CPI. Had a buy stop. Buy stop was above this previous candle. It got slipped all the way up towards 31.32, and price came down, and then I closed my trade. So that was that. So I mean, I had something in my mind was that, okay, if we're breaking above these highs, like, okay, so if I got even slipped with my buy stop order, my order came up above the wicks to the left. So I'm starting to think that, okay, can we continue to push up? We pushed up about 12, 15 pips. But then I'm like, okay, you know what? If we're going to push up, what's the probability we're going to keep on pushing? Because the numbers were bad. The numbers were bad in CPI. So I'm like, okay, can we continue to push up? But then we moved up about 15 pips. And then price came down. As it came into the 20 pip drawdown range, I closed out my trade. That's it. And these are the sort of decisions which you need to be quick about, when you're in the market. When you're looking at price and it's moving, and obviously you want it to go in profits, obviously you want to have a more return, but if it doesn't, then you have to be really quick on the ball. So I closed the trade, and that was basically it. So let's take a look at the next one. This next one I remember very, very clearly looking at the 15-minute time frame. So let's remove these zones, and let's take a look at this on the 30-minute here first. Now, looking at the 30-minute, what was going on was that we had a support formed, price came up, and then we created a resistance. Like that, we created a resistance, and now I'm asking to myself that, okay, now imagine we don't have all these candles here to the left hand side. So I'm asking to myself, okay, can we excuse me, can we break below the low and correct some part of the move, maybe 100 pips, maybe correct 100 pips, from the 100 pips, I can get 30, 40, 50 pips. So that was what's going through my mind. I'm like, okay, cool. We're on the 30 minutes. Let's take a look on the 15-minute time frame. So I look on the 15-minute time frame. There was support formed. This candle broke below support, broke and closed below support. And now I'm thinking that, okay, if the next 15-minute candle breaks below the low, then we can continue to push down. So as the candle was breaking below this low, it moved so quick that my reaction time could not hit the sell. It moved really quick. We moved quick below this area, and as it broke below, I hit sell, and it was so quick. So my order got triggered around 30.38, and then I think this was also live. I think this one was live. So I started saying, oh man, that's a bad entry. That's a very, very bad entry. That's a very bad entry. And remember this, a trade is not worth it if the entry is really, really bad. Because I wanted to enter around, 30, 39, 60, and that still could have put me in a position to get, okay, let me zoom in, to get almost into 13, 14 pip profit. But would I have secured at that point? No, I would have wanted to have run maybe till this wick, 50, 55 pips. But as it had a bad entry, that made me realize that I need to get out of this trade because it's a bad entry. I'm not going to take a trade if it's a good entry. If it's a bad entry, no, I'm not. I'm not willing to be a part of that. So 80% I want to close the trade as it retraced above this lower wick. Now I'm starting to think that okay, if we've broken below the low and it is already now retraced too much, like 16, 17 pips, this is a bad entry anyway now. So then I had to get out of that trade. So those were the two losses I had, and like, look, like this loss, this could have been way bigger. I'm sure some of you guys ate this bigger loss. So this one, it could have been way bigger. And another thing is I had to quickly leave this loss because I had a winning trade already, so I didn't want to compromise that. So let's take a look at this one here. $487. So this trade was a mix of experience and sort of like, intuition and making those risky moves. So let's take a look at this on the 1 hour here first. So when we're looking at this on the 1 hour time frame, obviously prices moved up bullish, and there's this sort of like range to be filled here to the left hand side around 30.19, 30.20. And like, above this high, you have like an 80, 90 pip range over here above this high, right? So that's like an 80, 90 pip range. The 1 hour candle has moved. The 4 hour candle has formed bullish, and we've also broken above the resistance here to the left hand side. So based only on the 4 hour, there's a much bigger, like, like a 200 pip range, but we're only trying to get about like, from whatever that's available from a 30-minute to 1 hour time frame. So looking at the 1 hour time frame, at this point, the entry wasn't taken. Where is it? We're at 10th April now. Yeah, down over here. Let's go towards the 30-minute time frame. And when we're looking at the 30-minute time frame, so this is what we see. Now on the 30-minute time frame, we had already created a resistance. Look, the candle came up, formed bullish, but there was a rejection here to the left hand side. So we're cautious about this, because if we want to take a buy as we're breaking above the high, we need to understand we've already moved 300 pips. So you're waiting for some sort of a support to form, some sort of a market structure to tell you that, okay, now we can continue to push up, right? So next candle closes bearish, wicks into this same area. And as we are continuing to wick into the same area, this one right over here, we're starting to ask ourselves the question that, okay, if we rejected here before, we're rejecting here again, rejecting. This candle is closing bullish now, but it's not breaking and closing above this established resistance over here. So even though it's established resistance, we still need to wait to see if a candle can, break and close above this area. You look at the next candle broke above this wick, came up into this area, and we rejected. This candle over here, we closed bullish outside of this range, So if we're closing outside of the range on a 30-minute time frame, you have to look at the time over here, and you have to really ask yourself that, okay, we had lots of volume around Asian session, and then we start to consolidate well into like, pre-London session. And now, as we're breaking above this area, obviously we have wicks here to the left-hand side, but as we're breaking outside of this consolidation area, these wicks could get filled. And if you look at this wick right here, like 30, 18, whatever, you still have like, like a 50, 54 pip range, and with volume, we can continue to push up. So looking at the 1 hour time frame, you're then looking at the fact that, okay, as this 1 hour candle, okay, let me remove this. As this 1 hour candle is closing above this area now, in these wicks, where before we were rejecting, now these wicks can be filled here to the left hand side, right? So whenever you have wicks here to the left hand side, you want the candle to close in them. You want the candle to close in them. As it's open, we don't know if it's going to close or not. So we have to wait for the candle to close in them, right? So, okay, perfect. So we closed within those wicks, and the 15-minute candle has also closed above this area. Now, when the next 15-minute candle formed, right? When the next 15-minute candle formed, as it was coming down, right? It came down, broke below these lows. I was looking at the 30-minute time frame and the 30-minute candle. it broke below the previous candle, which means that, okay, now the price can continue to push down. But as it came down and started to reverse, I'm thinking to myself, okay, you know what? Like, what's the probability that we can continue to push? And at this point, like, if you look at my lot size, like a 50 cent lot size, and like, I was willing to risk about $250 on this trade. 200 to $250, because I'm saying that, okay, if we're starting to push up, what's the probability that it can break its low to hit my stop loss? That was all that was going through my mind. And sometimes we look at this, we start to ask ourselves that, okay, if it's moving like this, what's the probability it can respect its low? Let me take a look at one update. I'm trying to see if we have 25 up. Yeah, there are no updates. Okay, right? So that's where I took the buy. And it worked out really, really, really well. Once this candle closed bullish, then I knew that, okay, if it's closing bullish even on a 30-minute time frame, this means this 30-minute time frame, it broke the previous low and it broke the high, and now it's continuing in its intended direction. So there's a high probability now for the price to continue to push up, because once it broke the low and then it broke the high, then there's a high probability for price to continue to push up. And as price started to push up, once this 15-minute candle closed bearish, I start to think that, okay, maybe now, like, there's a probability we can continue to push bearish or have some sort of retracement or whatever. So I closed out the trade. And then what did I knew? Because after that, I closed out the trade, and then I just, like, got busy, so I get ready. I think I was going to the gym, or I wasn't. I don't really remember. We broke above the high, and then we continued to push up. Amazing. Didn't get it, but once it was forming, I was asking myself that, okay, what's the probability we can continue to push up? And I guess it was a big probability that we continued to push up. So let's take a look at the previous one. This was whatever. I don't even think if it's even important to talk about this. What is it? I don't even remember this happened. When was this? The 5th. The 5th. Okay. Yeah, we are here on the 5th, and I don't even know where that is, but that's fine. Let's take a look at this one. So this was NFP, this $9.50. Let's go down to the 15-minute time frame. This was NFP right over here. So basically, this was what was it? This was a buy. Yeah, this was a buy. I think it was a buy stop above the previous candle. I don't really remember. But that was that. I just got, like, what, on a 10-cent lot, $9.50. That's about it. $33.75. This was another buy. This one there was basically no rhyme and rhythm to this. It was, I think this was done on a live stream or something, that where price came down and we w're coming down and we're saying to ourselves, okay, you know what, since we've moved this much down, like, look, this was about 143 pip movement. So I'm thinking to myself that, okay, and I'm saying this out loud, what's the probability we can start to retrace from this point? So I took the buy, and then price started to retrace. Okay, so this was, I think I was testing something. I don't know what I was testing. Let's take a look at this one. This one was on the 31st March. Was it the one that I'm thinking this one was? Okay, yes. $90 win. This one was right here. Where is it? Yeah, right over here. Right here. Another buy. So if we're taking a look at this on the 15-minute time frame, this is the 15-minute support we created, and we also broke above the previous candle's resistance where we formed. So we created this resistance, broke above the high, came down, creating support, now continue to push up. Now, how do we know whether price will continue to push up or not, rather than only knowing that we're looking for something like, in the bias that's moving up. And before I talk about that bias that's moving up, let's share what I did before this trade, right? So I took a sell before this trade and then had to change my bias. Now, looking at price action, hold on. It wasn't this one. It was this one right over here. Yeah, so this was a buy I took, and this was a sell I took. So before I took that buy, let's take a look at this 15-minute time frame, and let me show you this sell. Now, sorry for this movement. So looking at the 15-minute time frame, you can see that this is where we created a resistance. And as this 15-minute candle broke below the previous low, I took a sell and I had my stop somewhere up over here, So price came down, it went in profits, right? Price went in profits, almost 9 pips. And then we retraced, we went above this area. I think I closed 50%. I don't really remember. But as the next candle formed, and then we just like I'll call it a day at that point, right? You can see this candle closed with a weak bearish candle. So when this candle closed with a weak bearish candle, now I'm starting to think to myself that okay, the next candle has to break the low. There's a lot of wick range to build, So I closed the trade out. Wasn't really that comfortable. I'm like, okay, no problem. Now, then we pushed down whatever price came back up. Looking at the 30-minute time frame now, the next candle, it starts to print bullish. You can see right over here. This candle starts to print bullish on the 30-minute. Look, we created a resistance, and this 30-minute candle closed above this resistance area, and now the new 30-minute candle is formed. Once this new 30-minute candle formed over here, we're starting to think that, okay, the previous candle has no wick at the top. So this new candle has to create a lower wick, and then it needs to continue to push up. That was the whole idea. On the 15-minute time frame, of course, there's a resistance right over here. And then we're asking ourselves that, okay, what's the probability we can break this resistance? Well, there was basically a high probability that we can break that resistance. So, I mean, even looking at the 30-minute right over here, as the candle made its own low in the first few minutes, it broke above the previous candle high, stop loss, went somewhere down over here. And then price went in profits, 30 pips, and closed out the trade right there. On the 15-minute, it went a little bit wild after that, but I think we got a very, very good close. So this one trade was based out of intuition, the $480 trade. This was a partially thought out trade. This was a thought out trade. And so this was basically change of bias, had to change bias, because the intended bias wasn't working, even though there was nice, I'd say 30, 40 pip range for price to move down. But as the situations changed, we had to align our trading with it, because at the same time we had a wick to fill here to the left hand side. So that's basically what we were leaning towards. So at the end of the day, I think it's very important also to be very impatient with your losses. I know a lot of traders, they want to leave the losses running, maybe hoping, maybe saying that, okay, you know what, I'll eat the stop loss. No, if your trades go in profits, and after profits is going at your break even or even going in drawdown, just close, 50% and see what happens. If it goes back in profits, you'll make 50% of the money you want to make. But if it hits a stop loss, now you're going to lose less than what you wanted to lose. Okay? Awesome. Take care, everybody. See you Monday.